Felix here, and good morning to you. Welcome to this pre-market bloodbath. Blood is in the street on Wall Street. Well, actually, probably not on Wall Street, but on Main Street. Wall Street just announced record bonuses. But we have just some data in, jobs data, which is so outlandishly different to what the idiots who call themselves economists on Wall Street expect. And I'm a former economist, so I think I can slag off my former profession, that the market is taking a nosedive this morning. So I want to walk you through the following and enjoy this. This is still a good day of opportunity. I want you to understand the massive job market shift here. That's number one. I want you to understand what the Fed will now do and how that therefore translates into stocks, which is the real key risk to stocks here. And then also outline the massive opportunity that's here and that people are not talking about and they're not seeing it. And then I want to show you the key levels in the market today to show just how low we can actually go here. But if you want to avert your eyes, if any children watching, avert your eyes. Otherwise, here we go. This is pre-market. Pretty red, right? Nvidia down 2.6%, Google and Meta down over 1%, Tesla down 1.4%, AMD down 3.3%, AVGO down 2.2%. So chips getting particularly hit. We'll look at some of our favorites as well in a moment. But yeah, it's definitely not the morning we were hoping and wishing and praying for, right? But hoping and wishing and praying gets us where? Nowhere, exactly. So I asked you guys as we get into the news here, what is it that you need to make investing a success there? So far, the key thing seems to be basically picking stocks, timing it, and knowing when to sell. So keep putting those votes in there, or put it in the chat as well. And then as I run you through the jobs data that just shocked the market, let me also know how long ago did you realize you basically had that problem, or that need rather, to like understand that? Like, how long have you been thinking about this? Is it a month? Is it a year? Is it 5 years? Is it 10 years? Like, how long has that been simmering up there? While I explain the jobs data. So we were expecting 160,000 new jobs to be created by the private sector in the glorious United States of America. And what did the Muppets do? Apparently, they generated 256,000 jobs. That's a lot more jobs than expected. It's a massive amount more. And you might think that's a good thing, right? The economy is going to be strong. Everyone's going to be out shopping and spending. Isn't that a wonderful thing? But there is a little problem with it. If you have a very strong economy, and this is basically what this is saying to you, this is saying strong economy, and might be a good thing. But what does it also mean? It means the Fed does not have to cut rates because the economy is very strong. And they might want to actually calm that economy a little bit down to make sure inflation is stopped out. So no rate cuts until October is what the market's now pricing in. So basically for the next 10 months, not a single teeny weeny rate cut here. Now, generally speaking, non-farm payroll data is bollocks. But the market pays attention to it, so it matters. Unemployment rate also went from 4.2 to 4.1%, so also down. And again, Wall Street does not like people to be in jobs. Wall Street likes people to be unemployed. Now, there is a silver lining here, just a little one, that again, headline news will not tell you about today. And that is the average hourly earnings came in kind of on the low end. So 0.3%, 0.3%. So it's going up less than last month. That's kind of a little bit of a positive here, right? And that's pretty much the only one. Average hourly earnings for the year is now a little bit lower than expected. So that's kind of a little bit of a positive. And why is that important? Because that's like less inflation, right? Less wage inflation. So that's more important. Okay. A lot of you realized your what you need to become a more successful investor here in this year, says Haydenberg there, and Blues and Manak. I'm sorry, I can't pronounce that. Alyssa says a year ago. Interesting. Okay, anybody else realize that out of the 500 of you who voted about the need for your investments to get better, what you need? So let me walk you through here a couple of charts so this really sinks in. This is the unemployment rate. And what do you see? You see it's really come down quite significantly here in December, right? So it's a nice little dip. Not a massive dip, but it's a nice little dip. But you also see the last 12 months here, it's not that different. It's not that different to the, so this is likely a bit of an overreaction today. That's what I'm saying, because, whether you are here or there or there or there, it's really not all that much different. I mean, we were at lower levels in March this year, for example, so it's not like a huge difference. And then here is the average hourly earnings, which only went up 3.9%. That's pretty low, the lowest level since July. But, it is a nice sort of flattening of the trend there, which is kind of, low inflation. That's kind of what that's applying there. And in the last couple of weeks, says Brent. Okay, interesting. Nikki, since you watched my class, okay, so I triggered something around there. I'm sorry about that. That was kind of my intention. Because that's the first thing. You need to realize that you kind of need help, right? So why are people freaking out so much about a small change in jobs numbers, right? It's a bit like some people would freak out if only 10% of viewers had hit the like button on a video, but I'm built of stronger stuff. I can handle it. This is the S&P 500 bull run over the last 2 years. So this is us, right? This is us. That rocket ship there. And that is, as Goldman Sachs puts it, above the top decile. Could they put it any clearer, less clear? Basically, we've had one of the best 2-year runs. The sort of, how do I put this more easily? Okay, I was slagging off Goldman. It's easier said than done. A 1 in 20 bull runs are this great. That's kind of what it's basically saying. So it's a fairly rare occurrence, like how wonderful the market's been treating us these last 2 years. And therefore, people are worried, well, what if we therefore go back down to average? Oh my God, that could be like 30% down. That's what Goldman Sachs are saying this morning. They think there's a 30% chance of a 10% correction. There could even be a 30% correction, that kind of thing. I'm not buying it. I'm not buying it for a moment. To me, this chart says only one thing. You can live off the hope that the market's going to go up and just say my money and my wealth and my success will move with the market, which is kind of handing it over to somebody else, isn't it? You're saying it's somebody else's problem. That's why I'm wealthy or not. It's the government's fault. It's the guys in Washington or, people running California. Good luck with that one. And that's one way of looking at the world. Or you can say, I'm going to be in charge of it. That's what I do. I do not. I'm a control freak. Yes, I admit it. Hands up. I'm a control freak. My name is Felix. I have control issues, which is like I like to manage my own money because I know I can make money in the worst of markets. The worst of markets. I can also make money in the greatest markets. It's a little easier, perhaps. Is it easier? Yeah, it's you have to think less, I think, because you kind of get forgiven for basically buying pretty much anything. And therefore, what I'd say to you is, if this does become more dicey, it could become more dicey over the next week or two. I think we're going to have a brilliant 2025, and I'll also outline why I think that. But if it gets more dicey, a lot of people are going to get scared and shaken out and stuff, and you therefore need to have the rules and the framework and the guidance and the confidence to A, sleep well, B, make sure you don't, do silly things with your money and therefore lose money because it's expensive, right? Mistakes with money are really expensive. It's like the most horrible thing to lose money on is with your own money, investing it. And give you the confidence to actually, on a positive note, just be like, okay, brilliant, market's going down, fantastic. That's a great opportunity. What are we going to do with that today? If you get into that kind of frame of mind where you're just looking for like those things, oh, it's brilliant, everything's on sale, amazing. What am I going to shop for today? It's like going to Macy's and everything is 70% off. Okay, the 5 women on this chat are going, yeah, I get that. And then 95% of guys are going, what are you talking about, man? I go to Macy's. Is Macy's still around? I think they are, right? So what can I offer you on a day like this, a somber, solemn day like this? The masterclass. Somebody joked yesterday, yes, did you realize Felix had a masterclass? Yes, maybe I mentioned it a few times. I mentioned it a few times because I know it helps you. It's helped thousands of people already because I get the messages. So check it out, felixprehn.org/get free. And if you just only watch that today, then this little dip this morning that might scare the bejesus out of lesser people, what it does to you, because I know you're here, it's encouraging you to actually get better. And that's what hard times do. Hard times make great people. Tough times make great people. Right? Soft times make what? I was going to say politicians. A nuisance. But no, in all seriousness, a tough market is actually a great place to learn. We haven't had one in a while, which is why we're going to be producing a lot of like very soft-spined investors. But yeah, so check it out. felixprehn.org/get free. Do that right now if you like. You can leave this stream. I will not be upset with you because I know you'll be spending your time more wisely, because I'm going to run you through what's happening here today, explain it, but I'm not going to run you through the foundation that you need to really take better decisions and get you to your need, which is, what we started with. Macy's just announced more store closures. Janine, you seem to be on top of that one. I've only ever been to Macy's in New York, Fifth Avenue, and to the one in Beverly Hills. The one in Beverly Hills felt a bit like a store that should be closing, so maybe that's not too bad. How did it go from 4 rules to 3 rules, says Jeremy? It's kind of the same thing, really. Gary Newscomb, yeah, that's the one. Okay. Let me show you this one here. And this is, again, Goldman Sachs, our beloved dear friends at Goldman Sachs who really, really care about the small man. And there are 3 lines on here. 2 of them are blue. Because that way it will be easier. It's the blue one. Which blue one? Oh, the one you can hardly see. The average return of the S&P, and you can hardly see that, if there is no recession. That line up here is the no recession line. So what does it say to you? It says, when the Fed first cuts, so you get a rate cut here. This is the moment you get the first rate cut, first cut. The first cut's the finest, the hardest, which we had, right? We had the first rate cut in 2024. The market then either goes up or down, and it depends entirely on whether you get a recession. So this up here is no recession, and this grey line down here is a recession. When you have jobs data that's basically saying everybody and their dog got a job this week, what does that say to you? Does that say we're getting a recession or we're getting no recession? No recession, right? Does that make sense to you? Does that make sense to you? Put a 1 in the chat if this makes sense to you, this chart. So basically what they're saying at Goldman Sachs, statistically, historically, since the first rate cut, the market goes up by approximately 20% in the following year if there is no recession. And it looks very much like there is going to be no recession, because otherwise we wouldn't have full employment, right? Okay, thanks for the 1 step. I think in probabilities, exactly. So recession, very, very less likely. And so why the heck are we upset about this? Because it would be nice if we could get rate cuts and no recession. It's like, yeah, you can't have everything on the same day. Right? So today we have no recession. And then later in the year, maybe in the summer, we start getting rate cuts again. And until then, you're going to have to live without the rate cuts. So is it a bad place to be? No, it's not. It could be a tremendous entry point on a lot of the good stocks that we want to buy. And Ebony, you're spot on. You're spot on. Could all these new jobs be from holiday hiring? We're going to have a look at that in a second. I mean, jobs data is notoriously fickle, right? Jobs data is notoriously, I was going to say, made up. But yeah, if you click on non-farm payrolls, you can probably see where that came from. Okay, healthcare was 46,000 jobs, government was 33,000, social assistance was 23,000. Kind of sounds like government. Retail added 43k jobs for December, kind of makes sense. Following a 29k job loss in November, mostly due to clothing, accessories, Macy's, and manufacturing still declining. So manufacturing has been in a recession for like a year, but yeah, overall this is pretty decent. I think there is a fair amount of government stuff in here, and healthcare is sort of, yeah, a little bit government related, but still they're shockingly strong numbers. Shockingly strong numbers. Logan, you want your cake and eat it. I actually just had some cake and I ate it. So what's the important numbers here then today? Well, let me show you actually the live charts. I think that makes more sense. So here's Tesla right now. It's trading at 391 right now. Slight improvement from the 390, but it's a percentage point down. The support line still sits at 375. And as long as we're above 375, as long as we're above this yellow 50-day moving average line here at 360, I'm pretty okay with this. I'm pretty okay with this. This is not a monstrous drop. It's a 1% drop. But what I actually wanted to show you first is the S&P levels and then the NASDAQ levels, because those kind of matter, and I think it'd be useful for you to maybe write those down. What about fears of stagflation? I think you're going to get deflation, my friend. That's what I think. By the way, if Trade Vision is doing this to you, double click and it comes back. We have pushing a fix out on that today. So just double click on the prices here, some sort of scaling thing. So the S&P has support at 5,900. What the heck does that mean? Let me explain. Can I get a green? Maybe I get a green pen. Here we go. So the support sits at 5,900. Above 5,900, everything is fine. It's just okay. So there's a little bit of waves on the sea, a little bit of white froth, but nothing to worry about. The sailors out there, you understand what I'm talking about. But below 5,900, seas get very choppy very, very, very quickly. So you want to end the day above 5,900. And so far, 5,918, we're kind of okay, but the S&P does not trade pre-market. So if you want to see what's actually going on to the S&P, go to SPY, which is its ETF cousin. It's basically the index fund you can trade. And that'll give you very similar support level. It'll be off by a couple of points. And 585 is where we are right now. And we're trading 73 cents above it. So like really, really close. And yesterday we also touched upon that. So this is looking a little bit dicey. So again, you want to close above 585 today. Otherwise, things could go significantly lower. We're going to add the gamma flip to Trade Vision. I thought about that, my friend, Rath. A bit complicated, isn't it, to explain and align? That's the only reason why you haven't added it. So hence the support and resistance, which is, as you understand, also gamma related, my gamma friend there. But yeah, maybe there is a way we could do that. We're still thinking about how to do that. And what he's referring to, there's basically a point where the market gets more volatile and there's a point where the market gets less volatile. So at the moment below 585, things get very, very, very choppy, and we don't really want very, very, very choppiness now, do we? Quite used to our like sort of perfect smooth sailing. On the NASDAQ, similar story here. And again, you can get all this data. You can get it yourself every single day. Just go to Felix Prehn Trade Vision, try it out for a week. We're going to push out an update in the coming week, an upgrade that's going to knock your socks off. It's going to really knock your socks off. And I look forward to showing that to you. And if you subscribe now, guess what? You get it for free, because we're nice and generous to our early users. About 10,000 of you so far. And so therefore you're going to get access to that free of charge as part of your existing subscription. The support for the QQQ is at 510. You might want to write that down. QQQ 510 is support. So above 510, what happens? You are happy, right? Happy as Larry. And below it, you're like, ooh, this looks a little bit on the dodgy side, right? And that's exactly what we're looking at here today. And that's important data to have. You need a small chart for options gamma readout, says Alan. No, not necessarily. We could put a line across, which would literally say above here, caution, below here, good, or the other way around. It's something we're thinking about. I'm starting to like this choppiness by selling puts and picking up the stocks cheap at expiration. I actually did that on a Tesla setup yesterday. Maybe a little premature, who knows? So if you look at my Tesla trades now, there's a short put, which until the end of the month pays 13%, which I thought was better than a kick in the groin. And worst case scenario, I buy Tesla at 400, which I was thinking about doing. So we'll see whether that was a smart move, and we'll find out. MACD, yeah, I'm not a huge fan of MACD. I think it's just too slow. I don't think it really does anything for anybody, but I appreciate your suggestion. I'm not against adding it, by the way. I'm just saying I don't think it's particular. You know, there are platforms like TradingView, and I'm not saying that they are bad platforms. I'm just saying they have 1 million indicators, and I think it's overwhelming for people. And I want to make sure that we build something that isn't overwhelming for people. I want to make sure it's easy to use and intuitive, and it's just the really, really good stuff, and not all the stuff that's been out there since like the dark ages. That's essentially what I'm saying. So shall we have a look at some of our other stocks? Dare we look at, say, SoFi, which is a very, very, very rate-driven play. So down 2.6%. Was that yesterday? Oh yeah, it's down 14.26. It's below the 50-day moving average line, so that's pretty unpleasant. So if we close below that 50-day moving average line, I will close my SoFi trade, which is still up 200%. So we're not complaining about it, but yes, I will get out. I will get out of this if we close below that 50-day moving average line today. Why? Because that's what I do. And about Palantir, for example. Paul, humor? Are you accusing a German of having a sense of humor, Paul? You must be joking. You must be joking. So Palantir here trading at exactly the 50-day moving average line. These lines don't matter, right? No. Charts are just for idiots. Absolutely no correlation between charts and what's actually going to happen out there. Support line slits slightly below that at $65. So that's, I think, the zone above 65 where we need to stay. Anywhere below that, and this sell-off could get a lot worse. That's all I'm saying. It doesn't have to, but it's very likely to then go much, much worse. Trading stop loss versus stop loss, John. You know, tomatoes, tomatoes. You know, potatoes, potatoes. That kind of thing. It's a flavor thing, really. It's like, what flavor ice cream do you like? You know, if we agree on we both like ice cream, then we can be friends, and stop losses or tradings are similar. I'm personally not a huge fan of trading stop losses or random stop losses at sort of certain percentage levels. I would prefer to base it on the chart, and I think it becomes a better decisions, but it's up to you. Merits says, I'm a subscriber, love it, don't complicate it, please stick to your plan. I appreciate that. And you know, we're adding stuff. We're going to add a lot of stuff to it. I just don't want to throw like everything at you unless I feel. That's always what we say, is like, okay, is this really going to add tremendous value to people? Yes or no? And if the answer is I'm not sure, then we'll skip it and we build something else. Do you utilize Ichimoku indicators, Christopher? No, it's one of those things. It falls into the Fugazi category of nice to have, but no, I don't. I've studied it, but I don't use it. I never really have. Is your stop loss at the 50 EMA? That would be the parachute stop loss. That would be like the last point. There are other points on the chart. If you're going up, you don't want to necessarily always wait for it to fall that far. But if you are close to it, then yes, that's generally where I would set it. Will markets go down today because of better than expected job numbers, says Vital Plus? Yes. Is gold going up with rates cut stalled? I think it might be inflation fears. I think inflation is good for gold, basically. No, is gold good for inflation? It's, well, one or the other. Bloomberg's really helping today. US added 250,000 jobs, crushing estimates. Blowout job reports puts Fed rate cuts back on the back burner. And someone, I'm sure, talking about how the world is going to end. And then below that, a lot of flames. I mean, what the heck is going on in California? It's really, I feel very, very sorry for these people, because imagine losing your house and all those little bits and memories and things that you collect, right? I mean, pretty shocking stuff that this is what's happening. And California is like the 6th richest country in the world if it were a country, right? You don't see this happening in like third world countries. I don't understand it, honestly. I have no idea why this is happening. It seems incompetence from where I'm sitting. But do you use the 100-day moving average line? I tend to use the 150. You can also use the 100. So it's a little bit like flavor. This is a similar thing. I tend to use the 150. Is that LA or the market? Yeah, exactly. I mean, it's sort of like works both ways, doesn't it? But no, I mean, LA looks pretty shocking. I really feel very sorry for those guys. Hollywood's burning. Okay, I mean, Hollywood burning might not be such a bad thing, to be honest. It's a lot of that stuff should burn down. But no, it's the, there are normal, ordinary people there who don't deserve to lose their homes. I'm not saying that they should, but yeah, Hollywood is a pit of horror, in my opinion. Jobs data always gets revised down. Yes, there is also that. There is also the fact that it gets revised down every single time. So I think this is likely an overreaction, but an overreaction often triggers an even bigger overreaction, right? So if you look at, this is pre-market here right now. Let me just hit the refresh button on this. Actually, Nvidia is recovering and Tesla also a little bit here. So, maybe the market is realizing that wages are going up slower than expected. That's surely the one number we should be looking at when we look at inflation, not at how many jobs the government were created. You know what I'm saying. So Nvidia here down at 137. It's at the low of yesterday's trading range. It's not that big a deal. It's not really a drop back to 130 or something like that. So I don't think it's that huge a deal right now. But it's just, you get a bunch of these bad news items and people kind of get spooked and the algos start selling and the retail crowd starts to panic, and it happens very easily when you had a good season like that. But look at this chart. This is an Nvidia chart, right? Does this scream panic to you? Does this scream panic to you? Where we were in the height of June. We're the same levels we've been at for the last 3-4 months. So no, I don't think it really matters all that much. I don't think it does. It's just an overreaction, likely. Carl learning a lesson. Split 5. Okay, I'm glad you're enjoying the free trial. Yeah, you're using Trade Vision. Okay, brilliant. Just have to weather the storm until earnings. I think Trump has to get in. We have to see what the announcements are. What are they actually going to do? That could be very helpful or not. And then end of Jan, you get earnings season coming back in, right? Nvidia is quite a late reporter. They report 19th of February, but a lot of the tech stocks report earlier, like SoFi. I think they just announced, is it 27th of Jan or something like that? I got an email on that. Yeah, here we go, 27th of Jan. It's random, isn't it? How we remember random dates. So that's kind of the beginning of the earnings season late this month. LA had too many white male firefighters. Yes, that must have been the problem. Okay, some of you guys are worried about specific stocks here. Mobileye, for example. Look, the real thing, and that's why I asked you at the beginning, at the top of this video, like what's holding you back? What is it that you need to become a better investor? And what you really need is a set of rules, I would say. And that's why I give you a set of rules if you care to watch the masterclass. And here Mobileye, was it predictable that we were going lower? So this is a pretty ugly candle, right? That one there. So if you draw trend lines like I teach my students, we draw trend lines that connect, if we're allowed. There we go. Something like that. And if you don't like that blue color, you can now make it, a funky color. Then you drop below that, that should trigger some sort of risk management event for you. And if the next day looks like that, where you drop below the 50-day moving average line with massive volume like that, you really should be out of that stock. And I'm sorry if you're not, and, if you're not, and this is your experience right now, and you're down here at 1592, I can't tell you what to do because I can't give you financial advice. That would be illegal. So you have to come to your own conclusion. But what I'm saying to you is that these things happen for a reason, to encourage you to learn more and make sure that next time you buy something, you know what you're going to do and where you're going to exit. So market just opened. You can see the candle there popping on the chart. So that's a gap down, right? Gap downs are definitely not good things. And generally speaking, stocks fall faster than they rise, especially when volume's big like this. So I would be cautious on that, my friend, but you have to come to your own conclusion on that one. What do you think about Destiny's Child, says Kevin. ADDC is saying that jobs revision, so basically government jobs data is complete hocus pocus. It's just like made up nonsense. But the market still pays attention to it, as you can see here right now, and it impacts the market in the short term. And by the time the revision comes out, which nobody reads job number revisions, except for me apparently, and therefore it doesn't really impact the market all that much. So by the way, if this is happening to you in TradeVision today, double click on the price column here, just double click on it and it'll recenter it. We're going to add a little button here in the next 24 hours, which will make that automatic for you. But yeah, it's just a little bit of a scaling thing there. So NVIDIA is below the 50-day moving average. That's really good. And sort of back on the kind of downward trajectory here. So yeah, not looking absolutely brilliant here. Where in the UK are you from? I'm German, my friend. I was born in Germany. I moved to the UK when I was about 15. I went to school there, which is where I learned English. Hence this weird accent, which some people place as sort of, some people sometimes think, I think I'm South African or something like that. Weird German accent hanging in there somewhere. AMD is, it remains a falling knife. That's all I can say. It just remains a falling knife. We've had 2 gaps down here. That is really not good. But in the scheme of things, that's fairly irrelevant because we've been doing this since March 2024. So I have a whole video. I have an educational playlist on this channel. There's a whole video there which basically says how you avoid these falling knives. So watch that. Are you required to connect your trade broker to TradeVision? No, you don't need to. You don't need to at all. In fact, you can't yet. It's coming. At the moment, you can import your portfolio through a file, like manually, like sort of, you attach the file. That's what I do. That's how it comes in there. And that's going to become automated, hopefully shortly. We're waiting on the bloody brokers to give us access. But no, you don't need to. You can use this without any brokers. You just, if you want to see what your trades look like, then I think it's quite helpful. Very helpful, I think. And there are a couple of things we might exit out of today. I think SoFi looks a little dodgy. Tesla still looks all right in my book, but again, that doesn't necessarily mean it's the same for your book. We're up a lot. But would you recommend to get out of AMD? Aslan, I can't answer that question because that'd be financial advice. But I can say that I would not be buying AMD at these levels. Never buy a falling knife. It's an expensive lesson. So which is why we buy things that are going up. We buy breakouts and we get out when it stops going up. So at the moment at 398, 396. Oh my God, Tesla is green. Tesla is green. Somebody do something. Tesla is actually picking up green. That's pretty good, which makes it look a little bit less stupid that I sold Tesla puts yesterday, which is a bullish trade, by the way. So maybe I can terrify some people here with some options thoughts. This is one of the simpler kind of beginner options trades. So basically you sell a put option. I did that to the end of January at 400. And what that did when I set it up, so right now you would make 8%. You're going to get paid 8% for holding it. I actually got 13%. It's a little bit better. And it means that if Tesla stays above 400, I just collect the 13% or 8% if you were to do it right now. And if it drops below 400, I get to buy Tesla stock at about $370, a little bit cheaper for me because you get to keep that profit, which isn't bad, right? So I was thinking about buying Tesla yesterday, and then I thought, no, don't do that. Collect the 13%. And worst case scenario, you're buying Tesla at 370, which is a heck of a lot better, right? So that's what I set up yesterday. So if you understand these things, it's actually very cool, and you can come up with some very interesting opportunities. But I appreciate it's not for everybody, and it's not where I would start. Start with the stock stuff, start with the chart stuff, start with the masterclass. Link is down below, and that I think helps you a heck of a lot more. What do you think about shorting the VIX here? Where is the VIX sitting right now? 19, well, I mean, it went to 28, right? So I think it's probably a little premature. I'd say so anything above, 20, 21, 23, 2, 23 or something, somewhere up there. I would short it, yes, provided you have the capital to do that with, because what if it goes to 50, right? It did that here, remember? It went to 56. So you have to make sure that you don't get margin called for that. And then when it drops very low, sort of 13, 14 at the moment, then we go long on VIX and we just play that little zigzag game. It's a very nice way to make money. Do you hold until expiration? No, usually not. It's usually a very bad idea, unless you really want to get assigned. But no, it's usually a bad idea. So I'd usually get out of things every time. Do you speak German? Yes, I do. Sebastian Schmidt, mein Freund. Yeah, I do. It's my mother tongue. And I don't speak a lot of it. Actually, the only person I speak German with is my Israeli personal trainer, which is kind of a strange twist of bizarreness, isn't it? But yeah, I don't speak it a lot, but yeah. Is eBay a breakout? It was a day or two ago, wasn't it? eBay did pop up on our scanner. And we're going to put a scanner into Trade Vision. That's the big secret that's coming up here, which I'm very excited about. So yeah, there's definitely a breakout here on the 8th. Now, today with the market tanking, you have to reassess these breakouts a little bit and see how much is that going to drag stuff down. But yeah, that's a big move out. That's a big, beautiful textbook move out there. Short the home builders. Yeah. If you believe rates are really going to stay higher for longer, yeah, then wages just rose at a lower rate than expected, right? Is that inflationary? Okay. Unique Collective, appreciate you. Excited about the scanner, as am I. I'm very excited by it. At the moment, I'll show you what the data I'm looking at here, and there's still a couple that are not quite right yet. But yeah, there was some pretty good ones here in the last couple of days that I'm checking right now. So yeah, some good stuff there. So we will refine that hopefully over the weekend, and then we aim to put that out sometime next week. But as long as everything looks good. Is KMDA still a buy? So one of my rules is this is a trade we opened up. What was it, 2 days ago or something? Hang on, click on stocks in here, and then you can see our open stock positions. Here's just KMDA in there. It's up 15%. So in Trade Vision here, it's quite nice. You can see exactly look, I bought it, but you see how the broker bought it in 5 slices. I actually bought it in 2 slices. So you can see the prices paid and exactly the moments we bought it. And then you can see on the chart here, where you actually enter, which is super useful, right? I find that visual sort of thing super, super useful. And yeah, if you look at the actual stock chart, I don't like to be too late to the party, and given that we're again trading at the very top end of our trading range, I mean, it looks good. It looks promising, right? It looks like a winner that we're on here, and maybe it'll go a lot higher. You just always have to ask yourself, are we too late? And so I try not to buy things too late. So it really depends on how you want to look at that. Would you make more money trading options or just stocks? For me, it fluctuates a little bit. The last 6 months, I made more money with options than stocks, just because the market's been very, very kind. Options been very cheap, and it's gone up a lot. But it really varies. I think the better place is to start with stocks. It's almost the sort of noble, clean discipline. It's really simple, no special effects, no tricks. You can master that, and you enjoy that, and you make money out of it. Then I think if you want to, you have the time now because you make more money and so on. You have more freedom. Then maybe you can start doubling in options a little bit. But options, you really need somebody to hold your hand, because there is really a lot more to it than you think. And I'm very lucky. I've got a bunch of mentors who are all former market makers, retired guys. One of them is one of the first options traders hired by the Chicago Options Exchange. So one of the really first hires in the 70s. Jerry, amazing guy. And all these guys are in our programs. So if you want to get access to my mentors, watch the masterclass. There is a way in there as well if you want to talk to us about it, find out some more about it. But yeah, you really need some guidance on that one. Would you buy Tesla right now? I sold some put options instead yesterday, which I think in hindsight was probably a good idea. Fox Gaming saying Nvidia is tanking. It was down 2.5% or so just now. And this is, guys, this is all, in my opinion, an overreaction to the jobs data. But once the market gets into that overreaction mode, it might, overreact a little bit more. So we're at 135 right now. Where's the support and trade vision here? It's at 130. And watch that line, because we have historic lines for this too now. So you can see it's coming down from 138 to now 130. So we don't want that support line to drop further. That's really important. So if tomorrow the one support line moves to 120, then it's telling you the market's thinking, whoops, this is going to slide some more, which is important. Joao, okay, brilliant. Yeah, book a call with us, have a chat with us, and just ask. That's the whole point of it. Like for like 45 minutes or something, you can ask all the questions you've ever had and wanted to have. And we help people who are complete beginners or somewhere in between that and being super advanced. So our guys enjoy teaching everybody because it's fun. It's fun to see people go from zero to hero or from somewhere to hero. So yeah, always a pleasure. Is quantum a bull trap? So the way I would look at that, and let's look at Rigetti here, for example. Rigetti, as we should say. I don't think they're Italian, but they really should be. It's down 6%. That wasn't much of a recovery, but there were a couple, right? What was recovering? Was it QB2TS or what quantum stocks were recovering? Logan says, doing way better with options than I do with stocks. Thanks to Mr. Felix. Appreciate that, Logan. How well are you doing, Logan? Would you care to share? Like, how are you doing before? How are you doing after getting some help from us? So this isn't really much of a recovery, is it? So I know I wouldn't really say this is much of a recovery right now. This is like not looking all that brilliant. Rigetti is recovering. Okay, maybe. All the Wingfields are doing better with options and stocks thanks to training on Felix. So Scott, okay, another one of my options chaps. Appreciate that, Scott, and I'm very happy that you are. INQ, you think they're recovering? Okay, they're up 2.3%. I mean, really what I'd watch out for is if it does go a little higher, does it do it on low volume? That's typically the fake outs. The fake outs usually go up on very low volume, and that's when the real crash happens afterwards. So you'll just exit liquidity at that point. So I'd be very cautious with something that's gapped down like that. Carl, it's good to be cautious, my friend. Very good to be cautious. Use a paper trading account, but ultimately, so many people try to do this on their own. And it's a little more challenging than you think to like really like manage your money on your own. I think there are very few things in life that we would just do on our own, right? Like, would you go diving on your own if you've never done it before? You just put the gear on and go be fine? Probably not, right? You start to drive a car without instruction? Probably not, right? But with money, for some reason, we just think, I only spend like half my waking life, a little bit more than that, making money. It's not that important, right? Hardly any effort put into it, so let's go and gamble. So yeah, I just encourage you to, do what I do. I've got mentors. My mentors have mentors, and it makes sense. It just makes sense to learn from people who've done it and who've got the experience and are therefore going to make sure that I don't make the mistakes that somebody made, 100 years ago when the thing was figured out. So that's the way I do it, because to me, time is the most precious thing. And the more financially free you get, I think the more you realize that. And I've got some really super wealthy friends, like really, dinner the other day, there were like 5 billionaires sitting around me, and they're all amazingly nice guys, and they're all a little bit older than me. And it's all about time for them. It's not about, can I do this a little bit, cheaper or something. It's about, can I do this so that it frees up my time more? Because ultimately, you get to the end of your lifespan, and some of them are a little bit nearer that certainly than me. You don't think, oh, I wish I would have worked a little bit harder. I wish I would have worked a few more hours. What you actually think is, you know, what were the memories I had? What was the time I spent with my family? What was the impact I had? Like, that's kind of stuff that you look back on. And we are just somehow trained to like, we got to figure the stuff out on my own. You know, especially guys, we tend to be a little bit too proud to ask for help. So I've been there, I've done that. I'm just saying to you, ask for direction. If your wife ever says to you, for crying out loud, just ask for direction. Happens less and less nowadays because you have, you know, Google Maps and stuff. But they're right. That's what I'm saying. So a long-winded way of saying that. Scott, I appreciate our little chat every morning. I appreciate you tuning in as well. Here, Scott. Okay, you're kind of with me on that, yeah. It's just maybe just you know, would you inspire people, Scott? Like share with them, like what's the useful thing, being able to hop on a call with a guy who's done this for a couple of decades. What's the real like use case there? Is it just like a mindset thing? Is it like specific? They walk you away from a ledge? Is it like they help you not make mistakes, which would be costly? Like, you know, what's the sort of stuff that stands out for you, Scott? Elena, okay, I appreciate you agreeing with me on that. And tons of insights, says Scott. Okay, yeah, I think that's just really what it is. It's like with experience comes insight. And I always say the only people who really understand markets, as we're looking at this depressing INQ chart here, let's have a look at the overall market, is the people in, this is the life market. Tesla is slightly green. There's something positive here. The only people who really understand how it works are the bankers, investment bankers. Why? Because their boss taught them. Right? Their boss teach them because he wanted to buy a Ferrari or something. He wanted a bigger bonus. And how did he get a bigger bonus? By making sure his team was better. So he taught his team the lessons that he learned from his boss. And the guy learned it from his previous boss and so on. So the information gets like funneled down that stream. And that's where I would go and learn. So either you go and get a job in an investment bank, which is unlikely, or you find a bunch of retired investment bankers who enjoy teaching you. If you wish to talk to us about it, I mean, go check out the masterclass. That gives you a fairly good taste of that. You help with talking us through the Fed announcements. Okay, I appreciate that as well, Scott. Do you usually do the market open live, says Bob? Yes, pretty much every single day. I mean, most of the time. Occasionally I'm traveling, but most of the time I do it. Going to watch the masterclass, says Unity Beta. Brilliant. That's probably a really good way to wrap this up. Join Unity on that one, because that'll actually give you some real insight and some real, you know, knowledge and skills, and put something between the ears, which is our intention here. felixprehn.org/get free is the link down below. And if on a day like today you're panicking, just use it as motivation to get better and learn. Because this is going to happen again. We're going to have days that are way worse than this. This isn't all that bad. And you want to get to a place where you look at this and you go, interesting, brilliant. All right, you know, let's find the opportunities. And it's just like any other day. And you only get there through having confidence in your systems and your rules and your structures and your risk management. And these are not things that we were taught at school because, well, corruption. But therefore, we can take it on in our own hands, right? And that's how you get to real freedom. I think that's really what it's all about. So I love you for tuning in. I love you for watching. I love your desire to learn and get better. Keep doing exactly that. And I wish you a beautiful day. All the best.